report, a little video report today. I got this survey that Bank of America just came out with about the NASDAQ exchange. And as most of you know who've been following me, I've been very, very nervous about the NASDAQ market. I've been seeing a lot of cracks, so to speak, in the foundation. So today, the most important thing for me is for you guys to kind of get inside my thought process. Just if I give you a stock and say, sell this stock, well, some of you may do that. But if I explain to you why I believe you should sell that stock and give you all of my underlying reason, it would be best if you agree. Because if you don't agree, and then if you sell the stock and the stock starts going against you, you're going to be very doubtful. So I want you to completely understand my rationale, my reason, and my logic, because there's a lesson here. So follow along and see if you can understand why I'm doing and why I'm reacting the way I'm reacting to this news. So let me first talk about this report. Now, Bank of America is a pretty substantial analyst, especially when it comes to the tech sector. And this caught my attention because it says fund managers paranoid about tech. Bank of America. So, if someone like Goldman or Bank of America or Morgan Stanley talks, or Prudential in the old days, you probably want to listen to what they have to say, especially if it's a survey. And this survey was questioned by fund managers who oversee $601 billion in assets. So these are substantial players in the game, and I wanted you to kind of get an idea of what they're thinking. So the survey conducted the week through September 10th, and today's the 15th of September. So we're talking very, very recently. These are guys who show they're 80% long tech, up from 59% in August. But that's causing jitters with fear of a tech bubble now only behind a second spike in COVID-19 as the biggest tail risk. So again, they are really nervous about the technology sector right now. And these are some big players. Imagine $601 billion moving out of the NASDAQ sector. That would probably hurt. Now, in the past 6 months, the NASDAQ rose 40%. 40%. Fund managers indicated that they're picking up more cyclical names, more broader names, but are also staying focused on the U.S. reducing exposure to Europe. Why? Because U.S. is still the strongest economy. On the economy, 49 respondents now see the U.S. in an early phase recovery, while 37% see the economy still in a recession. And I think that's very interesting considering that right now, only 50% of stocks in the entire S&P 5, in the entire stock exchange, are trading above the 200-day moving average. Those expected a U or a W-shaped recovery stood at 61%, while 20% expecting a V-shaped recovery. So there's a lot more guys out there who are expecting a bumpy ride, kind of like a double bottom kind of a thing. That's kind of what I'm expecting more or less, with only 20% expecting a V-shape. That might have been too good to be true. When it comes to COVID-19 vaccine, 39% are looking for it to arrive in the first quarter of 2021, 32% predicting it'll be available in the fourth quarter of 2020. So not that much of a big difference there. But the analysts or the traders who the analysts questioned, who did the survey, a lot more, about 2/3 consider that the market still has some congestion left before moving higher and may come back down to the bottom. That's where the U or the W comes from. While only 37% still believe we're still in a recession, and 20% believe we're just going to, continue moving higher. And I think those numbers are very, very interesting. So I want to kind of give you these numbers, and then I wanted to kind of explain to you the reason why I'm also kind of nervous about the NASDAQ. And I'll conclude with the weakest stocks to sell, because if the NASDAQ goes down, the stocks that are the weakest will drop the most, and stocks that are the most resilient will hold on the most. So, but first I want to explain to you my momentum levels and show you through all this. This is the NASDAQ 100. That's the 100 top NASDAQ stocks. And this shows you how many of them are trading above the 200-day moving average. And right now, 82 out of 100 stocks. So you've got 82 stocks out of 100 that are trading above the 200-day moving average. But typically, that number is not very sustainable. If you look at this red line, and we're going back about 11, 12 years here, anytime momentum levels get substantially above 80th percentile, they tend to move lower. Again, above 80th percentile, they tend to move lower, above 80th percentile, so on, so on, and so on. And as you could see here, over the past 12 years, the amount of stocks going higher has been lowered. In other words, back in 2010, we had about 97%, so 97 out of 100 stocks trading above the 200-day moving average. But that number has been going lower every year. For example, now we have about 89, 90 stocks, and here we have 85 stocks. So we went from about 90% to about 85% to about 80%. And now, as soon as we went above 80, the number is moving lower. And I'm anticipating this number to continue moving lower. The most important takeaway here is it's not moving higher, which means if the NASDAQ moves higher from NASDAQ 100, this is very critical. If the NASDAQ 100 moves higher from where we are now, but you don't see this moving higher, you see it moving lower, it's telling us that there's narrowing of momentum, which means less stocks are causing the assets or the index to go higher, and that's very dangerous because narrowing of momentum can only last for so long, and usually narrowing of momentum when less stocks are causing upside begins or happens right before a sell-off. Now, what's interesting about this is, so the long-term momentum level, stocks that are trading above the 200-day moving average are no longer moving higher. They're now moving sideways, and it looks like they're about to fold and move lower. But if you look at the NASDAQ 100 stocks that are trading above the 50-day moving average, you will see here, that's a circle I drew a while back when we peaked out at 99%, but we've been going lower. And even though the NASDAQ's been going higher for the past couple of months, the number of stocks trading above the 50-day moving average has been moving lower. So now you have the number of stocks trading above the 50-day moving average moving lower, and you no longer have the stocks trading above the 200-day moving higher. They are now, it appears like it hasn't started going down yet, but it doesn't look like it's moving higher. So the point is, now you have stocks that are trading above the 200-day line moving lower, and you have stocks trading above the 50-day line moving lower, which means momentum levels are declining, and that's completely in line with this survey. That's fund managers paranoid about a tech. If you're looking at these momentum levels, and momentum levels are market internals, they never lie, they tell us the truth. And right now, the number of stocks trading above the 200-day moving average has effectively stopped moving higher. And again, the percentage of stocks in the NASDAQ 100, and there's only 100 stocks, trading above the 50-day moving average, hasn't been going higher since, let me show you this. I drew the circle all the way back around March, April, June, July. We're now in middle of September. So we haven't really been going higher. We've been going lower, and momentum levels are getting narrower. But it's a 50-day line. It's a medium-term time frame. If that begins happening here on the 200-day line, I could promise you that the number of stocks trading above the 50-day moving average is going to go not from the 50th level or 53 where it is right now, which means the NASDAQ is only slightly bullish. It's going to fall below the 50 percentile line, and we're going to have less than 50% of stocks in the NASDAQ 100 trading above the 50-day moving average, which means the NASDAQ 100 would actually go into bearish mode, even though it's looking strong because you have a handful of stocks that have a huge market capitalization there that are causing it to look like it's moving higher, like NVIDIA, Amazon, Apple, Facebook, Google, and so on and so on. Now, so the market is going through a distribution stage internally, both the 50-day moving average and the 200-day moving average. And that's confirming this little fear that these fund managers who are holding $601 billion in the NASDAQ are doing as well. That's confirming this. And that's telling me there's a really good chance the NASDAQ 100 may start cooling off. Maybe not going through a panic sell, but cooling off. And when that happens, and as you can see here, I'm not the only guy thinking this. When that $601 billion are thinking similar. And when that happens, guess which stocks are going to go down first? No, not Apple, not Nvidia, not Amazon. The stocks that are already struggling. The strong stocks stay strong as much as possible, and the weak stocks give out first. So I'm going to talk about some weak stocks in the NASDAQ 100. I don't know why I put this one here. It has no business being here, but the other ones do. So the first one is Cisco. Cisco Systems, this was a really, really hot stock. I remember Cisco and Oracle always moving head to head. Not the case. Oracle's making new highs. NASDAQ 100, Cisco is trailing below the NASDAQ 100. It is now trailing at below the 200-day moving average, and we're about to have a 50-day cross the 200-day, which is bearish. So we have given up a lot of the gains. We had a gap down, and it's barely picking up any price. The fact is, Cisco is not the leader that it used to be a while back, and I would be thinking of fading the stock, especially if it hits to the $42, $43 level. Fade this sucker. The long-term trend is weak. Next one, Intel. I know, don't tell my dad. My dad loves Intel. But it's not the stock that it was back when I was a kid. I remember Intel was, or even when I was an adult. I'm 50 now. But this used to be a world-class stock. Not anymore. We had a major gap, and look at this. We've been past this gap for months now. We haven't been able to go higher. And if the NASDAQ, the tech has a sell-off, the $601 billion decide to sell, NASDAQ is going to go down. Western Digital. Why is Western Digital struggling, one of the best growing NASDAQ stocks? Because people are using the cloud, Dropbox, Google Drive. People are not relying on their storage devices. Floppy disks, disk drives, they're just not in favor anymore. They're used to start our computer faster, but nobody's using hard drive, local hard drive to save anything on. That's why NVIDIA is rallying so much, because they were smart and they went from graphic processing to cloud storage. So again, Western Digital, not a happy stock. And finally, I gave you 3 tech stocks. I'll give you a biotech. Gilead Science, not a good name. Also trading below the 200-day moving average, as you could see here in a second. Yeah, and again, once it dropped, it had a gap, barely went up. It's rebounding now slightly. This stock is a dog. So to review, fund managers were surveyed by Bank of America. A lot of fund managers who have $601 billion in assets, who are 80% long tech, are getting nervous. 61% of them believe that this is not going to be a V recovery. This is going to be a W recovery, meaning we're going to have a double bottom, which means we're going to revisit February levels. It could happen. It's possible. Very, very possible. They are thinking of reducing their exposure, and the only thing that they're thinking that's as bad as this or nearly as bad is COVID-19. COVID risk is 39% first quarter of 2021, while this is a 32% risk, so 39 versus 32. So they are almost as fearful of a tech bubble as they are of COVID-19. And based on the NASDAQ 100 momentum levels, especially the 200-day, which is really overbought, and as you could see here over the last this is over a decade. Every time we've moved over the 80th percentile, we have turned lower. So NASDAQ doesn't have a lot of upside to go until it cools off, number one. If it keeps going higher while momentum levels are going lower, that's narrowing of momentum, and that typically precedes a bubble. And if we do have a bubble, we're going to see a W-style correction, which means NASDAQ will have a big washout and it'll revisit last February's price levels. And if you're looking to fade some NASDAQ stocks, which may not be a bad idea, take a look at Cisco, CSCO, Intel, INTC, Western Digital, WDC, and Gilead Science, GILD. And I hope that helps.